Good morning, everyone. Room is Jesse. How are you? Scott, Kanaka, iPad, Mike, Nestor. Room's a little light. Anybody get an email? Grand Monsters. That's funny. Hey, Mike. Somebody called their grandkids the Grand Monsters. Paul, good morning. Larry. No picture. Should see me. Yeah, Telegram went out. All right, Denise got the email. That's good. Thanks, Jeffrey. Email at 11:45. Perfect. Right on schedule. Oh no, yeah. I've heard they're having some wildfires out there. Must have gotten something. And all right. Well, we'll take it. Michael, I'm pretty fast. I'm not gonna have any issues there. Uh-oh. That's not good.
Right. Coming in hot. Hello, everybody. Hope everybody's doing well. Let me just get YouTube going on here. 1 second.
Oh, welcome. Okay, somebody just
Getting some,
Mark.
getting some new people here, man.
Yeah. Somebody's first time.
Welcome them. Let me just get YouTube on here. I only got 26 on YouTube. All right. Good morning. We got well, let me mute this. All right. We got Eduardo, we got Santiago, Darren, Shelvin, Durachium. Hopefully, I pronounced your name right. No one special. What your one-click VIP trade room Zoom link doesn't work anymore. You may want to fix it. Hasn't worked in days. This will reduce the number of attendees. Yes, it will. 1 second. Let me post this for them. 1 second, guys. I'm taking care of YouTube real quick here.
Oh,
What not?
hold on. A lot of there's feedback on the mic. That's better. Like a bomb just went off. Morning, Kevin.
Sorry about that, guys. I'll just let me take care of this. Want to make sure that everybody can hear me and see me. Geez, I need a haircut. Now, let me open up the chat here real quick. Good morning, good morning, good morning, good morning. Let me make sure my video and audio are on the right setting. And my video's on the right. Yeah, my video's definitely on the right setting. All right. Let's start off. Bob, how are you? Until, how are you? Ivana, how are you? Good, Mark. Nice. HWM, wasn't that one of our trades, Matt? Was that one in one of the members area
From the class.
from the class? Which, oh, yes.
No, yeah, no, but it is. It was in the class, but it was also in a program.
Good. iPhone, Ken, how are you? Robert, how are you? Oh, you should be able to see a pic, Laura. I could see a pic of myself, and I could see Matt on the screen. So there's a pic. Jeffrey, Ken, until Bob, old schools or cloth diapers. Brendan, Jack, yeah, that Palantir, that was funny, right? Cathie Woods. I'll talk about Cathie Woods in a minute. Tom, Gus, Bob, Scotty, Thomas, iPhone, Ivan, Keong, Kevin, Carlsbad. Hope you guys are okay with the fires. I know they're not all the way up there, but one click got me here today. Oh, one click got Murmus here today. So I guess maybe somewhere else it doesn't work. I don't know. No one special says your one click VIP trade room Zoom link doesn't work anymore. And here Murmus just got into it with the one click link. What's up? Yeah, watching paint dry. Actually, right now I'm about to see it with you. I'm not seeing anything right now. I'm not seeing the market at all right now. Market was terrible yesterday. Market's terrible right now. Buck says I'm on the phone and would like to send a private message. How can I get the roster up? Select individual attendees. I have no idea, Buck. I have absolutely no idea. I don't have a clue, but you can always send me an email. Sylvia, hello. John, how are you? Kendall, how are you? Kirk, Carlos, chop, 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 chop. Rochelle, how are you? Yeah, like watching paint dry. My best day so far this week. Good for you, Cyrus. Good for you. Good for you. Good job. Good job. Ben, hello there, Ben. The link in Telegram. No, I'm not talking about Telegram. We were talking about one click. Audio, no video. Yeah, we're getting everybody else is getting video okay. It may be something on your end. Eli, hello, Eli. How are you? Karen, how are you? Notes in a program. Okay. Cyrus, John, Robert. Nice, Sean. Good. Good for you. Good for you. Cyrus, Brian, True Trend Trade. Okay, cool. Bill, RP. Mike. What pick are you talking about, iPhone? I don't know what pick you're talking about. What picture are you talking about? Sherman, hello there. Ken, Zoom user, DJ, Jeffrey. It looks like the room's filling up pretty good, Ken. I mean, Matt, not Ken. Rose, D2,
Yep.
Rachel, when sell $1 white spread, how much money should one collect? When you see a $1 white spread, you shouldn't collect anything. You should stay away from that stock. Hey, Teresa. Richard, I think your camera problem must be with computer settings. Look pixely today. No, I'm not having a camera problem. I'm using a different camera today. And I'll explain why in a minute. I will. I'm going to talk about Cathie Woods in just a second. Just wanted to say hello to everybody. Yeah. Deanna, how are you? Pamela, hello. No video. I have video and I'm looking at Matt on the screen. Everybody else has video. Everybody else is seeing it. It's just on your end. So I'm using the good camera today, not the bad camera. Let me switch over to me. There it is. You could really see me clearly on the screen right now. And the reason, well, one of the reasons is because this camera is better. But what I wanted to tell you was my computer crashed at work today. The computer with all of my now I have two computers. I use a laptop and I use a main one. The one that's crashed is the one I'm using. The computer's okay. It looks like the video card crashed. So I'm only using it for one view right now. So I'm kind of using a different computer for hey Daniel. We have no problems with that. But I did have my computer finally crash today. The video card. So I'm just going to get a new computer. This computer is 5 years old, so I'm going to get a new computer, but it shouldn't impact you guys 1% at all. It's not going to impact you, but it's going to impact how many screens I have at work and all that stuff. So, but um, I wonder if it's an NVIDIA card or not. It's a good question. That's right, Jack. My wife got me some goodies from Colorado. Good find. I don't know what Dave's going to get me, but he's going to get me a new computer. I told him I need something that has power for six screens, so he should be able to get it. Yeah, video cards do burn out, so I'm probably going to get. I'm going to take this computer back home and get a new video card, and then Matt, I'll be able to install all those monitors I have on my other table
Oh yeah.
to the main monitor and use it there. So I guess it was just time, it was just time. Now, I told him specifically not to get me a trading computer. I told me to just get me a regular computer with a good video card and plenty of RAM. I use desktops and laptops. For trading, I try to use a combination of one desktop and one laptop. That way, if the internet goes out, I can tether the laptop to my computer, to my phone, and I could still access the brokerage and I could still get emergency stuff done. So, and I don't like to have my brokerage. I don't like to run two different sets of charts on one program. So the main one I'll use Thinkorswim because I have my Pro Trader dashboards. Thank God it happened today because there's nothing going on with the. I mean, there's not a great day for pro trading dashboard. And yeah, just a gaming computer or something, something that would make it easier for me to get the job done. All right. Can add two more video cards to run 12 monitors. Yeah, I had my own video card. I had my own. My dad used to put computers together for years and years and years for me. All right. So let's go ahead and let's share my screen. All right. You didn't have to switch anything off. I already had it here. So let's start off with the SPY. A lot of people have asked me, why have you been so cheap with us this year? Why haven't you been giving us a lot of trades and such? Well, I think most of you know the answer to that question. It's because the markets just suck. I mean, they're terrible right now. They're god awful. But we're trying. We're trying to find some goodies. But overall, this is not happiness right here. And as you could see, the SPY is just a lot of back and forth. This is not a good market, not a good trading action. Mike says cheap. What are we talking about, Mike? When you says cheap, I'm new and wouldn't say cheap at all. I'm talking about the paid programs. I haven't been giving out a lot of I'm doing it for your own benefit. I could assure you. Look, you got lower highs, right? You got lower highs. And here you got this thing that's playing around the 100-day moving average, and it doesn't know if it wants to go up or down. And momentum levels are bad right now. It's not a great time. And we had this nasty candle yesterday. So this isn't really a great time. I mean, it's an okay time for shorts. It's not a bad time for shorts, but it's not a good time for longs right now. Now, let me see the comment about you not giving things out. I think you have been very productive in sharing only what you. Yeah, I am, Mike. I am, but I just got an email. How come you haven't given us a trade for Stealth Surge in a week? Somebody said 2 months on a webinar yesterday. It's only been a week and a half. Take it easy, and we had a holiday. It's like it hasn't been 2 months. It's been more like 10 days. It's because the market sucks. Yeah, the market sucks. Cash is a position. Associate with you, and you've told us many times that we have to be super careful and need to be patient. Yes, 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 yes. Patience needed, complainers. Yeah. Save money, not most money. Right, exactly. You're up a whole $14 today, Richard. Exactly. They were trying to get nasty on the webinar. Yeah, like we haven't had a trade in 2 months. What? Like what? Oh, people love it. All right, that's number one. I wanted to talk about Cathie Woods, and I'm not trying to make fun of Cathie Woods. I want to explain to you the story of Cathie Woods and what there's a there's a you will be able to take something away from this story. Okay, you'll be able to take something away from this story. So trust me, if you pay attention real closely, there's a lesson here, and this lesson is very, very important. Okay, because I see a lot of you doing the same thing inadvertently, and it doesn't end well. It's going to end for you just like it's going to end for Cathie. Okay, so Cathie Woods came out at a good time when technology was rising, and she started buying up technology stocks. And she completely. And by the way, for anybody new here, I've been saying this story now for as long as Ken has been here, and Ken has been here for over 6 years now. This is not a new story. I was saying this when she was still doing well, at least, yeah, at least. So I was saying this when she was making money too. I'm telling you this now, but I'm explaining to you that there was a huge red flag, and I'll explain to you what that red flag is, because you guys make that mistake too. So she's she's not even a good analyst, but she's an analyst. She's not a trader. She's never traded before. So she started this fund, and she started buying up all of these high flying, basically IWM stocks, Russell 2000 stocks, not the smallest cap, but not the biggest caps. But she started buying these stocks when they were valued at P ratio of 105 instead of 5. Okay. So good for you, Rochelle. Good for you. So, how can I explain this without getting into like excruciating details? So she was really outperforming when she was hot. She was outperforming all the other tech stocks. So what I did was I had a sneaky suspicion. I couldn't prove it, but I had a sneaky suspicion. So what I did was I looked at her Sharpe ratio. The Sharpe ratio, she doesn't calculate profit factor like I do, but she has Sharpe ratio. And the Sharpe ratio told me very clearly that she was basically using stocks. You know how I always tell you guys, don't have more than one chip stocks, don't combine chip stocks with tech stocks. Their exposure is very correlated. She was basically putting herself in a position where she was over leveraging herself by concentrating her positions in the same stocks. So let me give you a practical example. Let's say it was beginning of 2024, okay? And you've never traded before. And all of a sudden, you bought all of these AI stocks, right? You would have looked like a genius to your best friends, right? You would have been leveraged, B, you would have been in the right stocks, and 3, you would have just made money hand over fist. I mean, you would be swimming in money. You would, no matter what stock you picked, as long as it was an AI stock, you would have been making money. And basically, that's what she was doing for many, many years. Her Sharpe ratio, instead of being like 0.93, was like 0.33. And I pointed this out when she was doing really well. And I said, folks, when she takes a dump, she's going to take a dump of the decade. So in essence, what Cathie Woods created for herself with her own hands, she created a artificial triple leveraged IWM. So when the market was going her way, she was making 3 times as much as any other hedge fund manager. So she started getting a lot of notice. Now, the people who write articles about Money Magazine, Investors Business Daily, they don't talk about it. They don't look this deep. They look at the surface. They care about how much money you're making. Oh, okay, great. Oh, wow. You've outperformed. The S&P made 50% in the last 5 years, and you've made 150. Oh my God, you're the best trader there is. But the problem is, this entire time the market was going straight up. And sure enough, when the market went straight down, old Cathie lost 3 times as much as everybody else. So all she was doing was so the reason people talk about her so much is because she was so well liked for all the wrong reasons. Basically, all she had to do was put her money in a triple leveraged IWM, and she would have been in exactly the same position. But that's what she did, Cyrus. I'm not. I know, but that's what she did. So, and people loved it because she was making the money and they didn't care. But remember, I tell you guys, like I'll like sometimes Richard will send me his return, and I'll see 2 stocks in it, and I'll tell him you're cheating. This is you're this is good while it's good, but when it gets bad, it's going to get bad. You're too correlated. You can't do that. If you want to do that, just double leverage yourself. Just buy the same stock twice as much. It's the same thing. Now, what does this mean exactly? Yeah, like Monster and Bitcoin. Exactly, Lucille. Yes. So what can you take away from this? If you think you're doing really, really well and you're outperforming the market, make sure you're not doing it via leverage. When you have related positions, you're just leveraging yourself. You're lying to yourself. You're thinking you're good, but you're not. You're just leveraging yourself. Okay. And unfortunately, leverage works both ways. It works to the upside and it works to the downside. Okay. So again, don't be like Cathie Woods and make a name for yourself for all the wrong reasons, like she did. Okay. Now she has a big problem because a lot of these stocks that she was buying, the companies were so poor, they got washed out. Every time the market has a correction and the IW came out from the biggest correction in 20 years, a lot of these stocks just get washed out and they become penny stocks. Some stocks continue going up. Unfortunately, she didn't buy the right stocks. So not only did she over leverage herself, but she bought a bunch of crappy companies. And now her investors are saying, well, Cathie, IWM, right here, did this. Look, remember I drew this line 3 years ago, guys? Right here? I remember you were telling me, and I said nothing good will happen until we break out of this. Remember that? I haven't changed it since. And Cathie, look, so everybody was thinking she's going to get so many lawsuits. Everybody was thinking that when the Russell comes back up, Cathie will come back up. No dice. So not only was she incredibly diversified, incredibly concentrated, but she also picked the wrong stocks. It's called a double whammy. Basically, she's an imposter. She's not a trader. She's not an investor. This woman has no clue what she's doing. That's the nicest thing I could say. They should definitely take her trading license away. The market completely recovered. Look at this. Look at this. Very bad. Very, very bad. All right. So what do you learn from this? Don't do what Cathie's doing. What platform is the best for options trades? I have a brokerage account with CS. The best platform is the best. It's the one you feel most comfortable trading with. And make sure the broker doesn't jerk you around. Yeah, Ken, you were there when I drew those lines. I mean, you were there throughout this whole discussion. You were there when I said that she's not going to. You were there when I said all of this 6 years ago. Everything I'm saying now, I said 6 years ago. And all you had to do was look at the trend and look at how she was making 3 times as much as everybody else. Because she had the same thing. She had everything in the same asset. What a dummy. Oh God. Anyways, so yeah, no recovery for her. No recovery for her. Anyways, very, very bad. Okay. Now, I wanted to give you another lesson today. I wanted to give you a lesson on when you should be doing credit spreads, what kind of credit spreads, and why. Now, by the way, I want to say something. I want to tell you something. A few people asked me. I got an email the other day, and somebody said, "Why do you keep saying unusual option volume doesn't work? Why do you keep saying unusual option volume doesn't work?" So I'm going to tell you my truth, and this is my experience. Now, other people will tell you I'm wrong, but I'm going to tell you my experience first, okay? About 35 years ago, A gentleman by the name of Larry McMillan wrote a book called Options as a Strategic Investment. That book became the best-selling options book ever in history, and it's in its 50th printing. It's a Bible. It's about this big. It's the first book I ever read. This is when I was in law school, so reading technical books was actually pretty cool. Yes, everybody does, Carlos, but let me ask you truthfully, does it put you to sleep sometimes? Because it's a wonder. It's an amazing book to put people to sleep. So, Carlos, uh, I read that book in the 90s. Yeah. So let me share some more goodies with you. Yeah, it's larger than the LA phone book. It sure is. Gets bigger every year. It was like half the size. So I want to teach you guys something today. But again, it's not that I'm saying UOA doesn't have any impact. I'm going to explain to you why I believe it doesn't have any impact. And then you can make the decision for yourself. All right? And Matt will testify that what I'm saying is truthful, right, Matt?
Yep.
He will certify me. And he'll call me on my BS too. So Larry McMillan, he was a big shot because he had this book 40 years ago. Still a big shot. I think he's like 90 years old. I haven't talked to Larry in a while, but nice guy, very nice guy, older gentleman now. So Larry was the first guy who came out with unusual option activity service. He invented the unusual option activity service, believe it or not. Yes, Larry McMillan. Anybody here my age or older, do you guys remember in the 90s? Do you remember? It's called Options as a Strategic Investment. There's only one. It's called the Bible of Options Trading. It's really like the Bible of options trading. Why not trade ARC options? You can. Do you have any family or friend? I have a lot. I was just chit-chatting with them on the phone and making sure they're okay. And one of them told me that not my friends, but their friend's house got burned down. Actually, literally right before I came on here, like 2 seconds before I came out. Anyways, yeah, I have a huge family in Los Angeles. Like not first cousins, but second cousins. My grandmothers had like 10 sisters and brothers. So I have a huge extended family and they all live in Los Angeles. But I think I would know. My mom would call me and tell me if anything bad was going on there. But I did reach out to my friend who lost their house today. Yeah, a lot of people are losing their house. Fires near Valencia. That's where Art, you live. I was going to say, you live near Valencia. That's near Magic Mountain. Yeah, I lived in Northridge. It's only 15 minutes away. Lake Castaic. Yeah, well, close enough. Very, very close. You're very close to Valencia. You're literally like next door to Valencia. So let's get back on my thing. So let me explain this to you. Let me explain this to you. Gotta give you a little history lesson. So Larry McMillan, back in the 90s. Yep, I was there during the earthquake, Penny. Anyway, Larry had a service, and let me tell you, the service was very profitable for about 3 years. And then Larry stopped doing the service, and he said there's no more edge in unusual option activity. That was about 25 years ago. Now, I'm going to explain. Now, Larry, if there was still an edge there, Larry would be doing it. But the guy who created the whole unusual option activity basically said 20 years ago, there's no more edge there. Now, I'm going to explain to you why there's no more edge there. Now, I want you to listen and pay really close attention because I'm the only guy that's going to tell you this. Okay? Nobody else is going to tell you this. And if you disagree with me, please tell me why. Okay. When there's an unusual option activity order, do you see it? Yes. How else would you know about it? And there's no trick questions here. Do you see the unusual option activity order, Matt? Matt.
Yeah.
Is it blind to anybody? Or does everybody see it?
Everyone sees it.
Everybody sees it. Okay, so what is the market? You guys know that there's a market maker, right? For every option. Matt, what does the market maker do when he sees a 100,000 order block on one strike price of his option? And by the way, Matt and I have never had this conversation before.
Yes, the hedge.
No, he's no. He's the market maker.
Market maker.
He's the market maker. What is he going to do? Somebody wants to buy the McDonald's 100 strike price call. He wants to buy 500,000 contracts. What's the maker going to do when he gets that order? He's going to do a few things. Yes, Sean.
Yeah.
He's going to widen the spreads.
Yeah.
And what else is going to happen? Raise the price. Implied volatility, baby. Implied volatility. So what is that market maker going to do the minute he gets that order? Arbitrage it. What? He can't do that. I've been told otherwise. Really? Now tell me what part of what I just said you guys don't agree with, and what rule says he can't do what I just said.
You see the SPY right now?
No, I'm going to look at it right now. Yep. Yep. Let me back to my chat here. So do you guys understand why there's no edge in unusual option activity? A few people have been asking me that. Why do I always say that? Where do you see the unusual options at? What do you mean by arbitrage? They arbitrage it. They basically price in arbitrage it. Arbitraging it means if they see an order coming in and they know that order is going to move the share price by the option price by 10%, they're going to raise the price by 10% of that option before that order hits. Why wouldn't they? Duh. Right. Why wouldn't they? So now you tell me, where's your edge? Oh, wow. Oh, guys, there's an order coming in. It's 500 times bigger than anything we've seen today. Woo, baby, let's take it for a ride. Tell me why they wouldn't do that. They blow up the opportunity by raising the price. Yes. They'll spread the bid and the offer, and they'll raise the price on both sides instantly. And then they'll process that order. Or they'll process that order and then widen the bid and raise it. But basically, they'll make it so that order is priced into the price of the option. But, oh, you mean, Bob, most people do this? Of course you can. You could see the order book. You could see every order that goes through. That's why it took ages to get into the program trade today. I don't know why. But do you guys understand? I want you to understand the mechanics of it. I'm a market maker. I see a huge order coming in. I start processing it. As soon as I start processing it, I widen the bid and the offer. Haven't you guys ever seen your order come in and the market maker spreads the bid and the offer? Imagine a huge order coming in. Yes. Why wouldn't they do that? Right now, oh, yes, I've seen that. Yes, now we're getting somewhere. All the time. Okay, so where's your edge with unusual option activity? Matt, am I making a little too much sense?
I'd say you are.
When I start making too much sense, I just stop talking about it because I have nothing else to say. Just think about it. Where's your edge? The order goes to a market maker, right? To process, to take the other side of the trade. He's just going to blow up the implied volatility to take that trade into account. And now you're paying the price of that option, taking account whatever that implied move is making. Take the side of yes, you could take the side of the market maker, but the market maker takes both sides. Right. Stacy's right. It's exactly like the house in Las Vegas. If the market maker sees a huge orders coming in on one side, he's going to arbitrage the other side to make up for it. Folks, my point is, when you see unusual option activity, it's already priced into the stock by the market maker, and the option by the market maker. Why wouldn't it be? All right. Yes, that's what his scanner looks for. But Lance has got different theories on life. Lance does his own thing. But I'm explaining to you. So when I understood that about 25 years ago, I stopped looking for unusual option activity because I realized that the market maker is going to arbitrage it. I think what Lance is doing, I think what he's doing is he's looking at option flow to figure out what the position is going to do next. I'm talking about the option price, arbitrage the option price. Remember, nobody knows what the stock. In other words, I think what Lance does is if he sees an order coming in for X amount of buys, and he looks at the chart, he's making an assumption that the stock is going to continue moving that way. I'm talking about the price of the option, the implied volatility that you're paying for the option. It's going to already price that move in. That's what I'm trying to say. Yeah, good. Yeah. So yeah. More than expected move. Yes, exactly. But I mean, nobody knows, including the market maker. How does the market maker know if McDonald's is going to go from 100 to 110? They, he doesn't. He can only do what he knows at that moment, right? If he knew it would go to 110, he would raise the option by $10 instantly. But my point is that option will take that price into account. Now, if something happens in the future, all bets off. But right away, when you see a big order coming in to try to take advantage of it by buying an option, that option is pricing in that large order. I hope you guys understand this, and I hope you understand how important it is, which leads me to the lesson that I wanted to teach you. See, I figure by first explaining to you what the problem is, now I'll explain to you how to take advantage of it. So let's say the market maker did this. It's like you have said that when we heard news that affects the market, it's already priced in by the time we hear about it. Exactly. But let's say that happened and there was some unusual option activity. And let's say that option's now overinflated. It's a perfect time to sell credit spreads. Remember, I was going to give you a lesson today on debit spreads versus credit spreads. I wanted to start off with the big problem and then give you the solution instead of starting with the solution and then giving you the problem. Okay. Richard says, I've literally been contemplating making a change to my trading, go from options to asset. Richard, as I told you many, many times, when you start getting past like the big boys, when I say big boys, I'm talking 5,000 to 10,000 share blocks. They don't do the options. They do the share because you're not competing with the market maker, Richard. You're competing directly with the market maker when you're doing the option. You see? Does the market maker have to buy, sell the actual stock based on the option activity? No, he doesn't. No, he can hedge himself with an option. Yeah. But you got to increase your size, Richard. But it's more fun and you have more staying power. Okay, so yeah, you have no DK. You can control your position by buying it, increasing your exposure more. So I wanted you to understand the problem. So now it's like, okay, Roger, now we understand the options can be overbought by the amount. So if you guys track unusual option activity, a lot of times those options will be overbought. They will be too expensive. And those are sometimes the best options to sell premium on. Okay. So I want to show you. This is what I was trying to tell you. Sometimes I figured that if you want to teach someone something important, don't start at the problem. Start somewhere else and lead into the problem because they'll understand it better because now they see they understand the whole issue surrounding it. So if you go to options, your unusual option volume, you see this? It doesn't cost anything and it's free. And it tells you, as I said, it doesn't cost anything. And you can find this on many, many other places. But if you see a stock hitting a lot of big orders, look at 1 month volume percent change. Do you see this? See this? These are stocks that have a huge volume percent change. That means a lot of options are coming into these stocks. That means implied volatility is very, very high. So if you start going on this list, and again, I'm just trying to explain to you how you can make money from this. If you see big orders coming into stocks, big option implied, if you see the implied volatility going haywired on stocks, find the stock that's, let me go back to my chat. Find the stock. Matt, can you, wait a minute. You can't think, Matt, what do you see on my screen?
C2000.
Oh, wait a minute. Hold on. I'm not. Huh. Okay. Hold on a second. Hold on. That's not what I wanted to share with you. Hold on, guys. Hold on. Hold on. Here we go. Do you see bar charts now?
Yep.
Okay. Sorry. I'm not like I said I'm only I have one monitor working and my laptop that has three, so I have a total of four today instead of gazillion. So this is what I wanted to show you. To get here, you go to bar charts, you go to options, and you go to unusual option volume. Okay. Okay. And again, we're totally not using this the way Lance is using them to predict what's going to happen in the future. We're looking at these to take advantage of expensive options. Okay. So here's a list of all of them. And you could see here, look, 1 month volume change. So you guys could see what I'm seeing now, right? Here, I'll give you a link right here too. And there are many, 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 many different sites that have this. So you don't have to rely. Thanks, Lauren. Thanks, Buck. I switched it over. No, this has nothing to do with gamma pockets or anything like this. Everything I'm telling you, Kane understands very, very well. Trust me. You're not going to teach him this stuff. He knows this cold. So if you see stocks, take a look at this list. Go down this list. And if you see a stock here on this list, now let's go back to since I'm here already, I'll just stay here. Well, no, I'll switch over. Let me go back to TC2000. So when you see a stock that has high unusual volume, okay, now we're back at TC2000, right, Matt?
You are.
I cannot post this link on YouTube because I'm on a different computer. So I cannot post. Actually, I
got
can't.
it.
Oh, thanks, Matt. Matt can do it. Thank you. Matt can do it. So now these are the kind of. Let me show you the kind of stocks you want to have. I'll show you exactly the kind of stocks you want to look at. See RSP right now? See how it's pinched between two moving averages? It could be pinched between the 50 and the 100, it doesn't matter. But if you see stocks pinched between the 100, 200, and again, I'm only showing you RSP because this is a very nice visual example of what I'm talking about. Okay. But again, I would start and again, you don't have to use bar chart. I know bar chart. Uh, well over I've used it for well over 20 years. Probably I've used it for over 25 years. You probably don't know this, but bar charts used to be a futures charting program. And that's how I started. So bar charts was me and bar charts were friends for a very long time. And so anyway, you want to find something like this that's pinched between two averages, okay? I want to make sure everybody's following along. Yeah, so after you do and find something like this, you could start putting in credit spreads right here above the moving average and below the moving average. Okay? So that would be an iron condor. Now, you don't have to do both sides, but you can. But the steps you would take would be start looking for stocks that have options, unusual option activity, hard unusual option activity. Go through those stocks. You're going to want to find very liquid stocks. And there's very few liquid stocks in that list. Let me show you again. Is this beneficial to you guys, or is this is this something you guys are benefiting from? I want to make sure you guys are getting value out of this. I don't want to make. Okay, good. So let me just go back. I'm sorry I'm doing it this way, but I can't share multiple screens. I'm working with one arm behind my back. So again, here we are. Good. Yeah, I'm trying to make this as palatable as possible. So you see this list, 1 month. You'll notice if we go down this list. So let's just try it. So far, I see one, eBay. Let's see if there's any others. And I don't know if eBay is between two moving averages. I'm just saying that eBay so far only one. Let's go further. I'm only looking for very liquid stocks. If it's not a very liquid stock, It's not going to work. Flute, another one right here. And by the way, the stock, they downgraded themselves without any earnings a few days ago. Very important. Very, very important. Here's a liquid one. I know that because we just got out of it earlier this week. IONQ. That's a liquid one. Car is fairly liquid. Wolf is fairly liquid. I just recognize these names because we trade them all the time. D-Dog is very liquid. Five is pretty liquid. But yeah, this is all stuff. I'm not charging you anything for this. I just wanted you to have some education to see what you could be looking at. Ice is pretty good. This is very liquid. Type 1 semiconductor, Snap. But you'll notice Pan W is on this list. That's very liquid right here. That was on my short list. So, and look at this, 34% higher volume in option activity. That means those options are going to be overinflated. But here's a few things you don't want to look at. You do not want to do it ahead of earnings because sometimes the implied volatility will go up because of earnings. You don't want that. You don't want that, okay? You want to avoid earnings. How are you finding the liquidity? I'm not T-Rex. Cool name. I'm not finding liquidity at all using this. And that's what I said earlier. I said that I'm just simply familiar with some of these stocks because I've been trading for so long and I've been doing this for so long. But like on this entire sheet, there's maybe 3 large caps. And I mean like S&P 500 stocks. Like, so I have an advantage over you. But look at call volume. You could see where the huge call volume, the more volume on the calls, the more volume coming in on the puts and the calls, the more volume those options will have. So like FUBU, I could assure you these options right here are very, very liquid. The here, you could see the put the call volume, you could see all the details. So you'll be able to tell if I wanted to buy FUBU calls right now, I could probably do pretty well. Again, this isn't, look, if you're looking for something where you can press a button and it gives you a list of stocks and they'll all give you 100% return, come on, let's be real here. Only Clyde has access to that, right? And I'm no Clyde. And Matt is not even close to Clyde, right, Matt?
That's right.
He can't even follow Paco. But great to hear someone calling out. Well, I'm just being honest with you, Damien. I'm just telling you the truth. But
if it's your first time here, those are pets, by the way.
Yeah, those are our cats and dogs. Clyde is my cat, and Paco is Matt's dog. I like Paco. He's a feisty one. So again, you can always find volume, but you'll have to look through it, and you'll have to. There's no secret formula to finding it. But I'm explaining to you. You want to do it on the largest stocks because they'll have the volume. Otherwise, the options will have a spread as wide as the Grand Canyon. This is a great way to find unusual option activity. You can also find highest change in volatility right here, highest implied volatility right here. Right here. And you'll see sometimes the same stock will be repeated over and over again, like RGTI. And you can even see which calls they're talking about here. You could see the implied volatility. Look at this implied volatility here, guys. Look at this implied volatility, 240%, RGTI. That stock keeps coming up a lot. And you could see which options. So again, don't just sell them because they have high implied volatility. Sell them because the stock doesn't have earnings. There's no major announcements coming underway. And find it because people are buying it. Look, Fubo's, you just found Fubo here. There's Fubo. They're buying the $6 calls. Okay, look at the volume, open interest on these things, volume. They're probably pretty tight. Again, all I'm doing is showing you a way to take, when you see a market like this, I'm going to change my screen again. All I'm trying to do is oh, good to know, Stacy. Thank you for that. That actually would make a lot of sense. So Randy, the public finally figured out that talking robots, that Terminator 3 era is not going to be around for 15 to 30 years, and that's according to the CEO of NVIDIA. Now, who else has been telling you that for years now? Remember when this whole AI, remember what I told you? Remember what I said about the internet in 1990s? Every grandmother. Oh, my grandson has an internet company. Oh, that billboard is no good. It doesn't have .com on it. I remember like it was yesterday. I was cracking up then, and I'm cracking up now. Every grandmother had a grandson that had an internet company. It has, and it's going to be around for much more time. Probably won't be either. Anyways, when the market action is like this, when you see pinched market action like you're seeing on the RSP right now, find stocks that are doing exactly the same thing with high implied volatility and start selling credit spreads above it and below it for extra juicy income. Omar says, rather wait for alerts from you programs and force them myself. Is that the smartest thing to do? You work for me. But Omar, a lot of people, you're making a good point, but I'm gonna say something here, okay? I'm finding, Omar, that a lot of people just follow me, but a lot of people want to actually learn to do it themselves. Now, you will never, ever, ever, ever learn to trade by following me. You will begin to learn how to trade. You will get confidence in trading, but you will never, ever, ever, ever learn to trade independently if you follow my trades. The reason you won't be learning you won't be trading independently if you follow my trades is because you're relying on me. So you're not relying on your nervous system has to do the work. Basically, let me give you a thank you, Jacqueline. I appreciate it. I love your name, by the way. So yeah, Omar, a lot of people, especially in the VIP room, want to learn how to do it themselves. And they will never, ever, 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 ever learn how to do it themselves unless they develop confidence in themselves. And you can't develop confidence in yourself unless you do something yourself. Now, I know that everybody knows that. Okay, so yeah, I could do that. But my point is that what you need to do little by little is, you know how when people start getting off the drugs, they don't go cold turkey, they go little by little or whatnot. That's what you got to do. You got to start figuring out how I'm finding those trades, and you got to find your own trades that match my trades. If you want to do it yourself, you don't have to do it yourself, but a lot of people here want to do it themselves. Because what will happen is this, and let me ask you this question. Oh, Roger's not here. Uh-oh, what do I do? Have you had that happen to you? Does any of you have developed a sense of reliance on me? Oh, what would Roger do? He's not here. Oh, he's sick. He's out. The market's closed. Do I buy? Do I sell? I don't know what to do. It happens. I know it happens. So again, if that happens, you have to little by little start relying on yourself. Yeah, trade with you, 90% self, watch. Yeah, and start documenting the trades that you took and the trades that I recommended. And hopefully you will start seeing your own trades on my watch list, or ask me for my filters on StockFetcher and say, hey, let's see how many I find the same as Roger. Yeah, my trade's a bonus trades, or maybe my trade is a good confirmation for your trade. But and again, this is only for people who are trying to learn to trade themselves. If you're good on, I love this stock. I love this stock. I love this stock, Angie. I'm in love with this stock. I think this stock was one of my short lists on my. Hold on, let me check something here. Hold on. Yeah, I am on January 8th. What's today?
8th.
Oh, Angie, I added it to my short list at 10:01 a.m. Yeah, so I love the stock. I love the stock. What I'm not confident about is the market. Richard says, this is why I was adamant about learning. I always thought this is what if Roger isn't around. Exactly. So again, you need to somebody asked a good question here, actually. Hold on. Claire says, does the distance between the moving averages matter? You want a reasonable, you don't want it to be too wide, but you don't want it to be too tight. You want something where there's a 2-3 day Go up for a couple of days, go down for a couple of days. 2, 3 days up and down. 2, 3 days up and down. It's a good question. That's a great question, Claire. Will you do a short write up on this lesson? Yes, just not right now. So I picked a gold one, but I got it wrong. And you mentioned it this morning. I did. I did mention it this morning too. Yeah, I mentioned a builder this morning. Um, Made a good money. Good friends were able to live for many years and will be here today. He loves. Good, 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 good. All right. So let me do an example tomorrow. I'll do an example for you of this tomorrow. Okay. But let me give you some stocks for today that I really like. I like CB quite a bit. I'll go through these pretty quickly. Okay. I don't know about doing anything today. I'm not here tomorrow. I'll be doing a webinar at 10 a.m., but I think that's about it. And then
Well, the
I'm
market's
back.
not open.
Right. And then I'm back on Friday. Right. There you go, Lucille. That's the spirit. 275s, 270 or 275s right here. CB, Builder. I like Builder a lot, actually. I don't like how it's moving right now, but I really like Builder a lot. Look how smooth this trend is. Remember we talked about this just the other day? Look how good that looks. 79 Delta 155s. So that is going to be like a Monday. Yeah, yeah, I think so. KSS. That is a beauty. What a beauty, right? Look at this trend. Look how clean it moves. It gaps down and just continues moving. No, I'll be here tomorrow just for the 10 a.m. Webinar. 23, January 23rd, KSS, 71 Delta, 14 put. But I will be doing chart. I'll be charting tomorrow quite a bit. That's what I do in my spare time. Pizza. I am in love with some pizza right now. Look at how it glides. Look how smooth it moves. You would think I'm talking about something else. I get so excited about this stuff. You can't fool people in this. You either love it or you just fooling, just 73 Delta, 4250. Sean, I've never heard anybody regret buying a little extra time on an option, but I've heard people regret not buying enough time all the time on an option. That's all I'll say about that. And I'm telling that to the man that's sitting in this room too, by the way. You hear me, Matt?
Yep.
Z's breaking down nicely. You're going to have your target would be the 67.52. You don't have much more here. 23 days to go, 75 Delta, 75. I really like these shorts that I'm giving you today. I'm going to be honest with you. Verizon's looking pretty good here. I think they got downgraded or something. I think 81 Delta right here. Pretty cheap too. Look at that. 40 put. Look how cheap they are, Matt. Cheap options. Pizza. I could use a little pizza. Remember I told you about this stock yesterday and I told you how it's a no-brainer? I literally said it was a no-brainer because I said FXI is breaking down and I said a lot of those Chinese people like to wear Nikes. Does anybody remember me saying this yesterday or does it sound like first time I'm saying it? Good. See, holding out on me, Angie. Holding out on me. Yeah. It's a little overdone now. It needs to pull back, but I do like it, but not right now. But I do love how it's trading intraday. Yeah, I said it yesterday. I was saying how I love Nike. China's doing bad. Huge exposure to China. Huge exposure to China. Good for you, Dave. Hopefully Matt is writing those down. They're holding out on me, Matt. All right, let me give you my longs. Now, I don't have a lot of longs, and I'm not really loving them very much. But so I'm giving them to you under protest. You guys understand? I'm giving them to you under protest. Look at that, Matt. We got 102 people on YouTube, and we got 440 here. Love it.
People know where the good stuff is.
What'd you say?
They know where the good stuff is.
Yeah. Spot. I'd like to see it go a little higher, although I love how it's bouncing off the VWAP today. We don't want puts, we want calls. Or Clyde will be upset. 70 Delta. Oh, they're expensive. We'll have to do a spread. 475 versus 480s right here. $3 or less, $3 or less. Roblox. Did I tell you how much I like this stock, Matt? By the way, Matt, it's coming to the 8-day EMA pretty
Yeah.
soon, too. 23 days to go, 70 delta. You can do 58 or 59s right here. Thanks, Angie. That's funny. All right. Geo. Look at that. Compression, 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 compression. Pow! On a day like this, too. And look at it today. Pow! I said. 70 delta, 29 call. Oh, Clyde's around. I'll post a picture of Clyde later. CLS. Matt, did I tell you how much I liked the stock earlier today? I like the stock a lot. Did I tell you how much I like the stock today? Look how smooth it is. Look how it respects the 15-day. Look at that. Pretty good, huh? And I'm telling you again today. I told you yesterday. You know, one thing about me, Steven, I don't really go back and forth very much. You can do the 67. 97 is fine. If you want, you could spread it with a 102 versus 105. Yeah. Roblox, not BBLX, RBLX. EP. Now, you got to be careful with this one here. See that? We need a little bit more upside. A little bit more upside. 85 delta, 31 call. Yeah, Ken knows I've been around for a while. I'm very consistent. You're not going to find me doing like you're not going to be seeing me doing like crazy stuff. I'm not. I don't operate that way. All right. All right. All right. I am going to get going. There's one thing I wanted to tell you. This is only for folks who are in the pit. If you're not in the pit, you can go. You can go. But if you're in the pit, I wanted to just say something. How are we doing with the zero DT? Actually, that's what I was about to talk about, Omar. So I need to communicate, and I'll tell you all this later. Let me take a look at CRM, Richard. For a short, yes, it is holding on okay. Preferred not going back and forth, but it is what it is. So we're experimenting with a zero DT system right now. We're going to be putting trades in the pit. There's going to be two types of trades. There's going to be scalps, momentum scalps, and there's going to be reversion to the mean trades. iPhone says horrible, lost all money yesterday. iPhone, it was an $108 trade. It was a bonus $108 trade yesterday. So on a system that we're experimenting with. So as I told Matt, if we're going to do the reversion trades, the bonus SPY trades. If we're going to do the reversion trades, those are not scalps. So I told Matt we're going to have to adjust our options to account for that. If we're going to do the scalps, then they're going to be in and out in 15 minutes. So you might have lost money if it was a scalp 2 yesterday, but you probably would have lost 15%, 20%, because the trade would have lasted about 20 minutes versus the reversion trade. So from now on, we're going to identify whether it's going to be the scalp type of trade or the reversion type of trades. The scalp type of trades will have very low risk because they're only going to be held for 5 bars, 6 bars, 20 minutes, 30 minutes, basically yay or nay kind of trades. The reversion trades is the trades we took yesterday, iPhone.
In the first trade.
That was the first reversion trade that we took, and we realized yesterday we're either not going to take trades like that, or if we are going to take trades like that, because they can last all day long.
The very first trade was a reversion trade too.
Yeah.
The one that was 60, a huge winner.
Right.
They're going to be big winners or are
Yeah.
big losers, so
So
small size. But we'll identify them.
So exact what he just said. So there's going to be scalp trades and reversion trades. The reversion trades are going to be like you can make a lot, you could lose a lot. The scalp trades are going to be very, very quick. And I'm going to identify them because I know a lot of people will want to take the scalp trades because they don't care if they lose 15, 20, 30%, but they don't want to lose 100% and they want to be in and out fast. So we're going to start identifying those trades for exactly, Wild Rangers. So we're going to be identifying those trades so you guys will understand and be able to, again, experiment, bonus, paper trade, small size. Don't go crazy on those trades. I'll let you know when it's ready. This is why we're doing it. If it was ready, then I would launch it as a system. Wouldn't you prefer me doing it this way than doing it the other way around? Point guns and shoot first and ask questions later. Isn't this better doing it this way? Exactly, David. So the rule as of right now, and remember, on these trades, we're going to give you the strike price. We're going to give you the option. So as a general rule, the scalp trades. If you see scalp or if you see scalp, or if it says scalp there, that means it's going to be in or out. It's going to be like boom, boom. 20-minute, 30-minute, 40-minute, but no more than that. Your way or against you. But the reversion trades, those are going to be frisky trades. They may be a little bit overnight. They may be a day or two. They may be 5-6 hours. So we will identify them. Okay. We will identify them. Okay. Yes, CRM put. Yes. CRM is definitely a put, not a call. I was surprised you didn't call to get out sooner because it wasn't that kind of a trade, Angie. It wasn't that kind of a trade. So I want you guys to understand that, okay? I want you to understand there's going to be two kind of trades. The reversions, they try to pick highs and lows of the day. You understand? The scalps just go in with the trend. They're like more of like our day trades in the other room. So Chris says, will the zero DT trades be highly liquid? They're
always liquid.
Chris, they're SPY at the money options. I don't think you can get any more liquid than that. I don't think
they're so liquid you can trade them after hours.
Yeah, they're so liquid that it's the only options that you don't need to use limit orders on. You can actually get filled. Yeah, they're the most liquid. There's nothing more liquid. There's nothing more liquid than that. No, not only SPY and QQQ, but same thing. Same thing. It's not what I prefer. It's what has so let me show you. If the SPY, if I'm day trading, you see the moving average, how close it is? See how close it is? Now let's look at IWM. It's a little further away, so I would probably trade the IWM because it's a little further away. So it just depends on, I'm looking at how far the major support and resistance lines are on a daily channel. That's all it is. Your spread with limit order spread is, yeah, don't waste your time. So again, I apologize for not explaining it to you ahead of time. But as I said, they're bonus trades. We're experimenting. Please give us a little time to work things out. My suggestion is just to trade one contract. It was $108. It wasn't a $50,000 trade. So exactly, Omar. That's exactly right. And you don't have to do it. You don't have to do it. You could just paper trade it. You don't have to take the trade. Nobody's forcing you to take the trade. And they're only going to be on the indexes, SPY, QQQ, and sometimes IWM. Okay? So again, please understand that. And I wanted to explain it. And what I'll do is before we officially start, I'll have a session. We'll have videos. We'll have all that. But it'll either be a scalp. And if it's a scalp, it's okay to do a little size because we will be out within 3-4 ticks. I mean, 3, 4, 5 minute bars. But if it's a reversion, it's going to be a little more sneakier. All right. So just wanted you guys to understand that. Okay. This will be included in the pub. This will be either its own separate program or an addition to the pit. I don't know yet. But I just wanted to keep you updated that Matt and I are working everything out. Before, instead of doing it how a lot of other people do it, hey, let's launch a program, sell it for thousands of dollars, and then let's fix it after. No, I'm not going to play that game. So I want to do this for your benefit. Okay. I'm all in for the beta test. Yeah, so just chill with it. It's a bonus. It's added stuff. It doesn't come with it. So take it easy and just do it. Keep it in the pit. We'll see, Stacy. We'll see what happens. All right. I'll talk to you guys later. Love you all. Thank you for being patient with me. And Cross your fingers in hopes that my new computer gets here sooner than later. I'll talk to you guys soon. Bye, everybody.
Bye, everyone.
What a nice session, huh, Matt?